It's the day after a Fed meeting where Jerome Powell threw up the bird to rate cut seeking President Trump. We are now in the land of the Powell pause, friends. Earnings out of Meta, Microsoft, and Tesla are dominating the business news cycle this morning. Precious metals are ripping higher again. I'm really locked in on copper. To all this, I say good Thursday morning. I'm Yahoo Finance executive editor Brian Sozzi, and you better be locked in because earnings season is starting to rage. And if you aren't locked in, get there right now because I'm locked in. So here are some quick hot takes on those tech earnings I just mentioned. Each of these reports had their own nuances. No broad blanket analysis applies. Let's get it rocking here. First up, Tesla. I love the more emotional billionaire Elon Musk on the earnings call. Love that he thinks we are entering an age of amazing abundance. Appreciated that he got sad when talking about scrapping the Model S and Model X to build humanoid robots. Maybe the Cybertruck should be next. I hate trying to park my two-door sports car next to one of those big monsters. So why did investors like a quarter where total deliveries tanked 16% because people don't want electric cars? One, there were signs throughout the earnings call Tesla is entering a period where robotaxis and humanoids will be key financial contributors. Two, Musk said Tesla needs to build and operate what he is calling a terafab to manufacture semiconductors. This will cost billions of dollars, as Intel can attest to. But this is the type of bullish nugget Tesla fans eat up, as it shows Elon is all in on building a different, possibly more lucrative Tesla in the next decade. Next up here on this fun list, Microsoft. Another corporate jargon-filled earnings call from the Microsoft executive team. It has almost come to a point where an investor can't understand what Microsoft is even working on anymore. My brief hot take on the stock getting hit. Azure cloud sales missed estimates. Azure guidance wasn't super strong. CapEx spending was above street estimates. 45% of MSFT's backlog is now tied to OpenAI. Although I will note, at least Microsoft showed signs of monetizing AI. That is another fancy word of saying they're making money. Called out 4.7 million paid Copilot subscribers, up 75% year over year. Lastly is Meta. Just like longtime foe Elon Musk, Mark Zuckerberg laser focused on charting a possibly more lucrative future for the social media giant. The street is shrugging off Meta's CapEx this year, potentially doubling year over year. Instead, more attention is being placed on how Meta's AI investments are driving better revenue across Facebook, Instagram, Threads, and I left this out, but I will add WhatsApp. Here on the Open Bid Roundtable, Kenny Polcari, Slate Stone Wealth Chief Market Strategist, Ellen Hazen, FL Putnam Investment Management Chief Market Strategist, and Yahoo Finance Senior Reporter Inez Ferre. Good to see you all. Kenny, coming out to you here. Out of all these quarters that just reported, which one did you love and why?
Well, listen, I don't own Tesla and I don't own Meta. So I looked right at Microsoft because it's one that I own. It's one that I like. I wasn't fazed at all by the negative reaction that we saw in Microsoft. You made a couple of very key points. I'm in it for the long run. I think the reaction is an overreaction. I think it provides an opportunity to buy a quality name at a discount. Now look, Meta shot straight higher after Zuckerberg got done, and that's great. And look, they got an $800 price target on it. I think it's traded $7.25 right now. And Tesla, I think, made some very interesting comments to your point about stopping production of the X model and the S model and moving more into humanoid robots. And I think that is going to, in fact, be the future. He's made it very clear that's where it's going. So I think there's an opportunity in Tesla for anyone who doesn't own it, like me, to take another look at it and to jump on. But I was while Microsoft was a negative reaction, I look at it as an opportunity to pick up a quality name at a discount.
Kenny, as if I needed a reminder why you're my favorite, I am reminded today because you always shower me with praise, love, appreciate it. Ellen, I'm going to stay on Microsoft. Kenny's fired up on Microsoft. Did this quarter excite you? The street not liking what they had to say on CapEx, the cloud sales, maybe not so good. I mean, they did grow strongly year over year, but there were some negative points in this quarter from MSFT.
So as I look at Microsoft, I think the key thing that was problematic, not only the Azure revenue year-over-year growth missing by a little bit, not too bad, but the free cash flow just plummeted, right? It was down to $5 billion. It's usually in the 20 billion range. So what we're seeing is Microsoft is spending all this CapEx. Okay, fine. But you need to be able to have cash flow from operations to fund that. And they didn't have that. And then you look at the CapEx that they're projecting for this year, and it's going to be problematic as well. So I think the question is, and why the market likes Meta so much more right now, is are you going to be able to see the return on that investment? And with Microsoft, they're talking about, we have 15 million Copilot paying subscribers, which is kind of a small number when you think about the scale of Microsoft corporate business altogether. But are they going to be able to get the return on that? Meta put up the numbers, and we'll see what happens. The thing that concerns me is that they're talking about 115 to 135 billion in capex this year, Meta. Last year they had 115 billion in cash flow from operations. So they better start producing increased cash flow if the market is not going to penalize them next quarter when the capex shows up in their free cash flow numbers.
Ellen, as a former analyst, I love that you're coming up here on our roundtable talking about FCF, that's free cash flow. Inez, coming over to you. Look, these Microsoft earnings calls have gotten really boring. I barely even know what they're doing anymore, full disclosure. It's become such a complicated company. But I'm listening to this call, and then Satya drops this nugget that 45% of Microsoft backlog is tied to OpenAI. And if you're concerned about circular financing as it pertains to AI, that is a number you don't want to see.
Exactly. The circular financing is something that the street has really been concerned with, and you've seen it with some of the sort of stock performance from some of these companies, especially also when it comes to software companies. These have not performed so well. But, going back to these reports, look, I think that I agree that with Meta, they have been able to show several points that agents are working. Their shopping tools are getting better, and this is very significant for their bottom line. And also talking about even productivity within the company. I found it so interesting that they said that since the beginning of 2025, per engineer, they have seen an increase of 30% output, that their projects that used to take now a lot more people are taking less people. I think that these are some of the signs of why you're seeing sort of the divergence in the stock performances between, for example, a Microsoft and a Meta that was able to highlight some of these points.
All right, let's keep this cooking here. That was good Microsoft analysis. Kenny, I'm going to go out on a limb and say that you don't have a Model S or Model X. I think you're a gas-powered car guy like me, and that's cool, man. But why we should care about what Elon said about S and X, and if you like Tesla, you got to care, because now he's going to take those factory lines and he's going to start pumping out humanoid robots. At some point, Elon's got to, we need to see these robots, and they need to start making money, and they need to start making money real soon.
Right. And I think, he's taking us down that road. He's made it very clear that that's where he wants to go. And he's even showed us, right, in certain, you could see it in expos, you could see it at conferences, whatever. He brings out the robots, they talk about it. I think it is the future. I think he's going to bring it there. Look, Elon Musk doesn't promise and not deliver. He promises and he delivers. And so it's a matter of time of, converting that manufacturing from cars to these robots. But I suspect that it's going to be very exciting, and I suspect that he's going to do it, and he's going to do it in a big way.
Ellen, let me lean into your balance sheet analysis skill set. We were just listening to you talk about free cash flow on Microsoft. When Elon Musk hops on an earnings call and drops this mini bomb on everyone saying we want to build terafabs, essentially a big giant building that makes computer chips to fund his various ambitions on robotaxis and humanoids, do you want to hear that from an investing standpoint? Because that is going to suck up free cash flow, and that could impact the stock's valuation.
So Tesla has never traded like a normal stock in terms of valuing it on free cash flow or earnings or any kind of traditional measure. So on the one hand, yes, as an investor, that bothers me because that's a very expensive proposition. On the other hand, as a stock investor, I don't know that that's actually going to end up mattering to Tesla's valuation and how the stock trades. It's like a number of other companies where the free cash flow has never really mattered to investors, at least based on the stock price. But that said, fabs are really expensive, and we don't have the infrastructure to build them here in the United States in the same way that Tesla is talking about. So, for example, I was looking at the Lam Research Quarter last night. They're a semi-cap equipment company, and they're global, right? They sell to Korea, they sell to Taiwan, they sell to the U.S. They're dominant in their etch and deposition subsector. They had 5% of revenues from the U.S., okay? 20, 30% from China, Korea, Taiwan. And so unless we see the infrastructure being built out in the US to support fab growth, right? It's not just the fabs, it's all the components, all the suppliers, all the labor. It's going to be really hard for Tesla to build a mega fab in a way that's going to be profitable, that's going to have the yields that they need, that is going to generate the long-term free cash flow. So he can build it. Maybe investors won't care about the free cash flow because historically they haven't. But I think there's also a bigger question about whether or not that can really be successful, given what we see about semiconductor capacity build-outs in the U.S. right now.
Inez, real quick, do you view Tesla as a car company?
No, I mean, it's now autonomous. It is about robo-taxis, and it is about it's about their Optimus. I mean, he's made it super clear about that and how it will change. I mean, the future is autonomous. And if I were an Uber driver right now, I'd be shaking in my boots because they see the vast majority of miles being autonomous.
Well, we're glad you're not an Uber driver, Inez, because we need you on this roundtable. And before I go, big moment for Yahoo Finance. We have launched our Poly Markets hub right on Yahoo Finance. It's an amazing site. I was scrolling through this, guys, this morning, and one prediction area caught my attention is who do people think will be the largest tech company by the end of June? Let's toss that up on the screen. It was pretty fascinating. Kenny, it's a battle between the likes of NVIDIA, Google, and some other big cap tech names. Who do you think is best situated to be the largest tech company? Is it still NVIDIA moving forward?
NVIDIA's right up there. If it's those four names, I am going to go with NVIDIA. If it's Microsoft, Apple, and Alphabet, if that's what we're looking at, I'm going to go with NVIDIA.
Ellen, another one I was just briefly scanning this morning was who will have the best model by the end of January. I mean, of course, it's almost done because January is almost done. But Google, 100% of people think that Google will have the best model in the market. And I hear what Kenny's saying, but Google's making a strong case to at least, if they don't make it to June, end this year as the world's biggest company.
I think Alphabet has a really good shot at getting that because they have a much less capital intensive model than NVIDIA, even though they still are spending a lot of capital, but they are able to grow advertising. They're able to catch up with OpenAI when people thought they were left for dead a year ago. So I would go with Google on this one.
And as I assume you're coming in here with NVIDIA.
Hands down, Alphabet,
wow.
definitely.
Wow, okay.
Yeah.
Okay. All right.
They've got YouTube, they've got the ads, they've got Gemini, they have all of those, as was just mentioned.
Nez, you're always full of surprises. I appreciate you all. Amazing analysis on a big morning for earnings. You are all the best. And be sure to check out Yahoo Finance' new Prediction Markets Hub, powered by Poly Markets. Scan the QR code on your screen for more. It's a really great destination. Love it. As much as I want to make my next segment about the Super Bowl being played at Levi Stadium, I have to stay in character and slice and dice another earnings report. This one is from none other than, wait for it, Levi's Chief Financial and Growth Officer Harmeet Singh isn't coming to us from the field this morning, at least I don't think so, but he is coming up next for a chat. Don't go anywhere. Solid is my takeaway on the earnings report out of Denim King Levi's. Quarterly earnings beat estimates, which is always good to see. The initial 2026 sales outlook was above estimates, also good to see. And it looks like holiday sales momentum has carried over into the first quarter, also good to see. But a few things caught my eye. U.S. sales on a reported basis fell 7% and were flat on an organic basis. And the full year earnings guidance range was below some consensus estimates out there. Harmeet Singh, Levi's Chief Financial and Growth Officer, is here for my Power Player block to get into all this. Harmeet, my friend, good to see you here. And I'm inspired a little bit about the big game coming up here at Levi's. And I'm thinking about all the trash talk that happens on the field. Can you declare that you all have won the denim wars? Sorry, American Eagle, we see what you're doing on out there. Gap, your quarters are cute. We have won these wars.
Yes, we have. And we're getting started as we make this conversion to more of a denim lifestyle company. So just talking a little bit about the year, Brian. 25 was what I call a turning point in the company. We accelerated our revenue growth. We accelerated our profitability, delivering 7% organic growth for the year, establishing us firmly as a mid-single digit growth company, higher EBIT margins, record gross margins, and high single digit EPS growth. The transformation of the company into a denim lifestyle and a DTC first company is successful. DTC now represents 50% of the company and has delivered another trifecta, which is positive comp sales, higher EBIT margins, and importantly, opening more stores. And the denim lifestyle is the transformation as we expand our addressable market. We are now into non-denim. We're selling skirts and dresses. We have entered the pinnacle category by the launch of Blue Tab. So if you think of our 7% growth, a third of that growth is through the expansion of our TAM. And to your point about establishing ourselves firmly We are number one in men's, women's, and the youth for the first time in decades in the US. And globally, obviously, we're leading both the denim category and the expansion, across both men's and women's. So let me pause there, but hopefully that answers your question.
Of course it does. Harmy, if anyone can measure this one, it's going to be you. As you look back over the past 12 months, the performance you put up, which was rock solid, how much because of the Beyonce campaign, which was very successful? And then in the same vein, how do you replicate that success this year?
Yeah, no, the brand's having a moment. I think we're probably the strongest we've been in decades. And as a company, both operationally and financially, I would say, we are at a stage where we can take it to the next level. To your question about Beyonce, the partnership has been very, very successful. We leaned in because we are really focused on growing our women's business, and she really helped us resonate and connect with our consumer. Clear evidence, our women's business, which is now more than double what it was a couple of years ago, is close to $2.5 billion, grew 11%. And, we're leading with product innovation across different tiers. And our view is the women's business, which is a little under 40% of our business, should be headed to be at, closer to 50%. And the gross margins are accretive to the company. So last year was about, music, leading with Beyonce. We signed up Sozzi. We've got influencers around the world. Alia Bhatt in India, Diljit Dosanjh in India as an example. This year, it's all about music, sports, and connecting better with the youth. And that's where we are debuting at the big game our Super Bowl ad, which is the beginning of a global campaign that will last through the year. And that's what we believe, Brian, continues to build momentum on top of momentum. And that's why our guidance for the year, again, was in the mid-single digit growth, 4 to 5%, which laps a 7% year. The category is accelerating. We are growing at twice the pace of the category, again, establishing a market leadership position that you talked about.
Harmy, you mentioned the Super Bowl marketing. First ad, in 20 years for Levi's? It makes sense you would do it at Levi's Stadium, so I hear you. I mean, that's not a cheap ad. How much does that cost?
Yeah, I'm not going to get into the dollars, Brian, but what I will tell you that the ROI on our marketing investments is really paying back. I mean, I'm a big supporter of the marketing that our CMO, Kenny, brings to the table. And I'm being the growth officer. I do believe it drives and accelerates growth. Importantly, it pays back. And we're seeing that in our EBIT margins. Next year, for example, we have guided that our EBIT margins will continue to expand, as we set up the pathway to get to 15% operating margins over time. And importantly, it accelerates revenue growth and expands our addressable market. So I'm a big believer in what is currently being on the plate for marketing for 2026. And as I said earlier, the brand's never been stronger.
Harmy, everyone that I've talked to, let's say over the past month, have reminded me we're getting ready to go into potentially very large tax refund season to the extent we have not seen in some time because of the Trump administration's One Big Beautiful Bill. If I have this right, you did not bake this into your quarterly guidance. Why not? And how do you expect these refunds to impact the denim market?
Yeah, overall, so yes, you're right. We didn't bake it into a guidance. It's difficult to predict. And it's always important to, as you guide, to go in with a perspective that you can beat this over time. And that's the way we are thinking about our guidance. That's how we have thought about guidance over the last 5 quarters, etc. But to your question, the consumer in the U.S. has been strong, very resilient, responding very well, especially to newness and product innovation. That's what happened during the holiday period. For example, November and December, which is what we call Nocember, was up 7% and really builds the momentum as we enter 2026. And so, as the refunds take place, the consumer is strong. We're leading with innovation. We'll have some great marketing. I think all that will build and demonstrate progress in the company as we continue to accelerate growth and profitability. Because there's a relentless focus on driving cost management and ensuring that we continue to expand EBIT margins.
Harmeet, when the Patriots win the Super Bowl, are they going to get one of those Super Bowl jackets you're wearing presented by you and your CEO?
Yeah, just stay tuned, Brian. And we've got two great teams playing in a wonderful stadium that is named Levi's. And so it's a wonderful opportunity for us to demonstrate and leverage our brand. And obviously, stay tuned for the Super Bowl ad, which we're debuting after 2 decades.
You got a pick here? I'm asking everyone.
I'm going to decide on game day.
Oh, I knew that was coming from you, Harmeet. I knew it.
The two great teams. I wish the 49ers were there, but, the two great teams is going to be a great game, and it's in a wonderful stadium.
All right. Thanks, Harmeet. Enjoy that big game, and looking forward to talking to you again soon. We'll talk to you later.
Thanks, Brian. All right. Take care.
A final thought before you go. This has been a week of major corporate layoff news. And the week isn't even over yet. If these sackings don't partially reflect the growing impact of AI inside large companies, well, then maybe I am badly misreading the tea leaves. But I don't think I am. UPS says it will send 30,000 people packing this year. They are calling this a voluntary buyout. Essentially, that's HR speak for you're fired. Amazon is letting go of 16,000 more people. That must include the team that oversees the checkout palm scanners at Whole Foods. I love using this thing, but got an email this week. They will no longer be in use come June. I'm very sad about that. And Home Depot said it will let go of 800 corporate workers and demand those that remain come back to the office 5 days a week. Great way to thin the ranks. Put in an RTO plan. Have a great day. Julie Hyman is up next on Market Catalyst.